Nigeria, bank credits to Nigeria's private sector increased by 1.2 trillion naira in the first quarter of 2021 to stand at 31.4 trillion total. This according to data obtained from the Central Bank of Nigeria. This is in line with the CBN's continued efforts to compel banks to boost their credit to the real sector of the economy so as to stimulate Nigeria's economic growth. According to the analysis of the data from the Apex Bank, credit to the private sector increased from 30.1 trillion naira, according to as of December 2020, to 31.4 trillion as of the end of March 2021. Meanwhile, credit offered to the government that declined by 410 billion naira in the review period. Fund managers in Nigeria are offering dollar-denominated investments. Fund managers across the country are taking advantage of the rising demand for dollar-based investments to offer dollar-based mutual funds targeted at retail investors. Survey of some of the major fund managers in Nigeria reveals a rise in the number of mutual funds based on investments in US dollars with a promise of returns in the single digits. Ayodeji Ebo, head of retail investment at Chapel Hill Denham, joins us further to discuss. Ayodeji, good to have you in the studio.
Yeah. Thanks for having me.
Great stuff, great stuff. I want to start with the USD. What's been happening with fund managers offering more US dollar mutual funds? Is that due to inflation? What factors would you attribute that to?
I think the first thing is it's based on investors' demand. So when you analyze the FX, the Naira against the dollar in terms of, so you would have seen that adjustment, if we use the word adjustment, over the years. So most investors now are trying to see how they can hold part of their savings or part of their investment in dollars to be able to hedge. Because as long as once you have dollar obligations, you need to have that part of your dollars. So imagine I've met someone before. I say, okay, since I've collecting my salary in Naira, I've been converted to dollars in the last 2-3 years. So without even investing it, when you look at with the adjustment we've seen in the last 2-3 years, you will be in the money, at least minimum of 50% return. So fund managers, based on request, and there's that direct impact that you also see FX as with inflation. There's the imported element, whether it's food and some other items. So you also, to help hedge against that and be able to breach that inflation negative return, fund managers are coming up with funds that are dollar-based.
Fantastic. What kind of questions should investors be asking when they are shopping around for these mutual funds?
So I think the first thing that when you are when you want to invest in mutual funds is to first ask about the regulations around it. So mutual funds have different underlying assets. You have the dollar mutual fund, equity mutual fund, money market mutual fund. So first understand what are you going into. If you know your risk appetite doesn't go along with equity, so you don't invest in an equity mutual fund. So if we're talking about dollar mutual funds now, look at what's their past return. Also compare that return, the kind of instrument they invest in. Is it almost at par? Because mutual funds are for small, mostly retail investors, because it's like you are collectively pulling funds together. But you also have for those that don't have the time to also manage their investment, because it's managed by professionals. So you also assign that tax to them. So if you don't have that time, you can invest in mutual funds. So once you understand the returns, you also try to benchmark it with the available instrument. You also want to look at the company. Is it licensed? Is the Securities and Exchange Commission that license mutual funds, whether it's a closed fund or it's an open-ended fund. It's the SEC. Then you also want to look at the firm. How long have they been in existence? What's their track record? I think it's really very critical before you make any investment.
Fantastic. Thank you so much. You mentioned benchmarking against returns. Is any positive returns in USD acceptable, or what kind of benchmark should one use after getting past those metrics you put together?
So mostly when the available investment to put your funds is mostly Eurobonds, whether it's a corporate or a sovereign Eurobond. So when you look at and there also that time to maturity. So typically you want to benchmark maybe with the 3 to 4 year instruments, because of the fund manager also needs time, and that's why there's always a lock-in period, mostly between 90 days and 180 days when you're investing in a dollar mutual fund. So when you look at what's the return of the dollar of the Eurobond, Some may also invest in other U.S. Markets, securities, whether stocks. But the best way to look at that return is look at what the sovereign or the corporate Eurobond, what they are doing within maybe the 2-3 year time to maturity, and you can see whether they are outperforming or they are close to that. But you also need to, for most people just have their dollars just sitting in their account, not earning. So what you look at is, I'm coming from almost a zero level to whether it's a 6. Yes, you mentioned single digits. So even if it's 5-6%, you look at that return and you are bridging that gap, because as long as there's inflation, that imported, but the value of that money may also be depreciating, even if you are not doing anything with it.
Well, sir, thank you for that. How important is it to have a portfolio mix of USD and Naira assets?
I think in Nigeria, it can't be overemphasized. We all know that as long as Nigeria, we don't diversify our FX inflow, it's all based on oil. We're all smiling now above $70 per barrel.
Right.
But most time when there are shocks, when there are volatilities, you see that, and reduction in liquidity, because even the CBN will now have to see a way to work around it, and which most times, if it's impossible or it lingers, then there will maybe an adjustment. It means that having your funds in Naira. So what we would recommend, if you know you have dollar obligations, school fees, health, tourism, then you need to keep a portion of your investment in dollar denominated assets. You need to invest them in dollar denominated assets and not just keep the dollars.
Fantastic. And I want to hop on quickly to the credit to the private sector. What do you make of that increase with what's going on with how much funding, I guess, the credit sector is private sector? I say
yes,
credit
I think
sector. Private
part
sector,
of what
yeah.
has informed that, when you look at the interest rate environment, which started from last year. So a lot of the corporates were able to issue corporate Eurobond commercial papers, even in the first quarter. We're seeing a bit of reduction because of the high interest rate. But part of that, because even when banks, when they invest in commercial paper or Eurobond, it's like they're also lending to that company. So what we've seen, that credit to the private sector, is the yield environment. And that is why the CBN is also trying to balance between, yes, inflation is high, what interest rates can we maintain such that the private sector is not crowded out. Like we say, we're crowding out the private sector. Because once interest rate is high, 17, 18, at what rate will corporates have to issue? And by the time you look at the return on or their margin, they won't be able to meet up, and it will not make any business sense issuing at that high levels.
Fantastic. What would you say about the hurdles that still exist to accessing credit for SMEs, MSMEs, and so on in Nigeria?
Yes, I think part of what even for the SMEs, focus, they are very critical. You look at their contribution to job, about 84%. We have based on estimate, about 37 million SMEs or micro, medium enterprises in Nigeria. But beyond even the credit, the capacity. So we need to, even for the banks, they need to be more focused on building capacity. Yeah, even at that small level. A lot of SMEs, you focus on turnover. You see activities, but you really don't know that indirectly you're even spending your little capital. It is when you are about to restock that you discover that there's really no fund. So they even need to understand that financials on how to keep record keeping, managing that business. They need to understand that inflow, how to recognize even their income at that small level. So they will be able to build from there, because that's what is happening to a lot of the SMEs, and they run into a lot of cash flow issues and they are unable to expand. So even if you advance them credit and they are unable to even understand how to ring-fence risk management at their own little level, then at the end of the day, so that's one hurdle that I feel a lot of them. But as we progress with credit rating, even I believe that there should be a structure for even the informal sector in terms of credit rating for the SMEs, not the rating for the top guys that we know that before you can access credit.
Ayodeji Ebo, Head of Retail Investment at Chapel Hill Denham. Thank you so much for joining us.
Thanks.